Hey guys, welcome back to the channel. In this video we're going to talk about the stock market, the overall state of it, where I think it might go today. A couple different scenarios based on what the Fed meeting looks like. So we're going to talk about that. Before we do, just to reiterate, not a financial advisor. Make sure that you do your own research before investing. Also, if you find a value in the video, smash the thumbs up button, subscribe to the channel if you enjoy our content, and hit the notification bell. That way YouTube can let you know every time we release new content. So let's get into it. So the pre-markets, it looks like we were up a little bit more, but we're slowly kind of creeping down to where we're basically flat for the moment, because people are actually just kind of waiting on whatever basically the Fed does today and whatever Jerome Powell says today, and which is pretty common. So we're currently in fear. And depending on again what happens with what he says or what the Fed does, we're either going to drop down aggressively and go into extreme fear, or we're going to pop our head back up into at least into neutral and start like a little bull run. But I honestly think that we're going to see and here's why. Because to me, if everyone's expecting, I think 75 basis point rate hike, anything above that or at that, I think sends the market down. I think 75 or above sends it down. I think that if he comes out and he's super hawkish and aggressive and negative, then I think he sends the markets down. That's two scenarios there. I think that if they raise the base, if they don't hit the basis point 75%, let's say if they do 50% basis point, but maybe they talk about like what's the end game, like are we going to continue to raise rates, and what's the overall number that we're going to raise them to. Then if that number's like 4.5 or 5 or something like that, then I think the markets go down. So almost every sign is pointing to the markets going down. The scenario I find that could send the markets maybe up is if they come out and they say, hey, look, we're going to raise the rate 75 basis points, but we're going to stop whenever we hit at 4.25, something like that along those lines. And I think that people would maybe see like the light at the end of the tunnel type thing, and maybe that sends the markets a little higher. Or if they just come out and raise 50 basis points, and I think people are gonna be like, oh, okay, it's cool. I think that again, kind of a light at the end of the tunnel type deal. But I really feel like we may see like a little small green open, and then as soon as he starts talking, I think we fall hard today. It's just my opinion. So let's take a look at the charts for the S&P 500, and let's see what they're telling us. Alright guys, take a look at the S&P 500. Like I said in the stock pick video from this week, 4818 is about to disappear basically from your high of the 180-day 4-hour time frame, and then that's actually going to change to roughly about 4750. Okay, will be your new high, or 4752 for that time frame. Currently the overall low is about 3636. We did break below 3889, but we're pretty close to undervalued or oversold territory, which usually signals that we're going to have a little pop up here. But it's not every day that you have the Fed coming out talking about raising rates. So if, like you said, we get like a 50 basis point hike, or they talk about the end goal of we're going to stop raising rates at X amount, and it's not a crazy number, then I think that we could start to see a little rally. If we get all the other three scenarios that I mentioned, then expect a very large, in my opinion, large red candle over today, maybe tomorrow, and then within the next week we could bottom out at basically retesting the lows of 36.36. In my opinion, it may take some time to get there, but I think that that's probably where we're going until things start to kind of settle down again and have us start making our way back up to the upside. So I'm going to show you kind of hypothetically what the fib levels are going to look like once they actually update. Okay, so they're not there just yet. However, we're going to look and see what they'll kind of look like. So roughly at about 47 50 is going to be the tip top there. Eventually, after like another day or two, that's going to update here. So that would then put us at 38.75 being our resistance, and then the next level about 40.62, but your floor still stays the same at 36.36. All right, past 40.62, then you have 41.93, 43.25, 44.88, and 47.50 at the top. However, we want to focus just about staying above 40.62. That's the first step, maybe back to 4100. But with the state of the overall markets and how dumb our government is, you just never know what can happen. These next couple of years may just be, volatile and rocky the rest of the way. So I'm not too sure about that. But keep an eye out for that, guys. The Fed meeting today, talking about raising interest rates, and keep an eye out for the overall sentiment of the market. Like if you're not able to listen in on the Fed meeting, just go to type in S&P 500, and you can just watch the S&P 500 throughout the day. And then if you see it boom and start taking off, that was good news. And if you see it just tank, that we're in probably for a rough couple of days, specifically today. So anyway, guys, that's all I got for you in this video. Let me know your comments below. Other than that, we'll catch you in the next one.